give us your elevator pitch, right? It's what is Remuner doing for everyone who we talked a lot about compensation plans, etc. But tell someone who doesn't have a clue, maybe it doesn't even work in sales, what is Remuner, right?
Okay. One important thing before that, my second child was born 2 months after starting Remuner, which is also very important for
That's
really,
contextual analysis.
Context.
I know why you say it, because it's a tough one.
Yeah.
And relate.
And thanks to my wife from here, because she's been a fundamental piece of keeping all of this crazy life we have.
Absolutely.
But Remuner. So Remuner is a platform that helps companies manage customer-facing high-frequency incentives for teams that are facing their customers in a way that is efficient, that is transparent, that is visible, that is easy to use, and that it creates really transformational impact on the company performance.
Awesome. So right now, let's jump into more technical stuff within your experience as well. I would like to have like backfire questions as well. I have like a lot of things in my head. When you decided, it's clear the idea that when you decided jumping into this, it's like, okay, we have a huge pain. I already had this pain. Your co-founders, they already understood this. Okay, let's do it. Who do you sell it to? How do you sell it? Let's connect this with the world of sales as well, in a motion of Remuner as well, or Remuner in Spanish. So first, let's start there. And then I want to jump into more, how do you see the evolution of the seller and the RevOps and the sales ops paradigm that we are talking right now? So yeah.
Okay, so we sell to mid-market and small enterprise companies in sectors and industries that are sales heavy, let's say, that have a lot of people that are customer facing. Either if it is field sales, so people on the ground visiting their customers face to face.
Yeah.
Either if this is telesales from the more transactional customer care, customers, the telesales, let's say, kind of approach, to a more consultative big enterprise SaaS, where you have account executives that is also remote selling, let's say, and also POS, point of sale selling, which is more retail and this kind of thing. So companies in the mid-market, small enterprise, even some corporates, some of them might have operations in multiple countries. We're based in Barcelona. We operate all from Barcelona, but we have customers in the Middle East, in all the big countries, in Europe, in South America and North America as well. And we have a few things in APAC, but that's not where we are stronger.
Okay.
And in terms of industries, we cover digital, SaaS, of course, but we also have customers in financial services, insurance, real estate, retail, pharma, medical device.
So basically every single type of company that goes along this criteria that you're sharing, that at some point have compensation plans or commission-based plans.
It's companies that have customer-facing roles,
correct,
with high-frequency incentives. High frequency being less than 1 year.
Correct.
So if you have a sales team that are only compensated with a yearly bonus, probably you don't need us. If you have teams that are compensated at least partially on a monthly or quarterly, that's probably where you need us. And we say customer-facing because it's not only about sales. But
everything around customer-facing roles.
Exactly.
So now that you mentioned that, can you make a parallelism on how you are, if we can share some strategies or ideas or how you see this happening?
Frameworks.
Frameworks. I am the framework guy.
And those frameworks.
Framework, strategies, technical stuff or tactical stuff. Like, what are your buyer personas? Because I understand that you can sell it to HR, to finance people, sometimes to RevOps. How do you see that evolving, and why the RevOps creature or appears, let's say?
Yeah, so the issue or the context we have when we're approaching a customer is that there is not a chief commissions officer in any executive team.
Yeah.
So normally the compensation problem is something that is 1 or 2 layers below that, and you really need to understand. And another thing we have is, I don't know, if you sell to accountants, normally accounting is always in finance.
Yeah.
Compensation, you might find it in different roles, in different companies and in different industries.
Like in your case, it's Signaturi, COO. Exactly. It was a headache for you. You know how they think, you can target them.
And in Signaturi, we had a RevOps team who was owning this, and the RevOps team was reporting to me as a COO. Yeah. And you might find another company where RevOps is under CRO. Yeah. Others where it's under CFO, and others who might have a senior VP of RevOps reporting directly to the CEO. But in digital, in tech, you normally have a RevOps. But if you think about a retailer, fashion retailer, they pay commissions to the people that are on the shops, but there's no RevOps in fashion retailers. So normally you have either the sales or the business side of things. You might have operations / RevOps / commercial excellence, or you might have finance. Those are typically the three functions that might be our buyer. But depending on the company, depending on the industry, there's more one or the other. They might change. And that's part of the discovery that all the companies selling out they need to do at the beginning. That's also part of the discovery we need to do. But unfortunately, most of the companies do not have a chief commissions officer, or at least
that
someone
would be a good role to create,
or at least someone that really takes care of this at a C-level suite. Because it's, as I said, it's probably the biggest variable cost you have if you don't sell physical goods. And if you sell physical goods, probably it's the biggest variable cost outside of the COGS.
The COGS, exactly.
And no one in the C-suite is really 100% owner and responsible of optimizing that cost.
And one point which maybe we didn't consider yet, and I think every salesperson out there can resonate with is, of course, you are angry when your commission is not right, but there are many scenarios where the company pays too much commission out and the company loses money, actually. So if you can streamline that process.
And when you pay less and we complain.
Yeah.
Because we complain a lot, right?
I've seen companies paying millions in commissions by mistake, being identified later on when they implement tools. And
even the seller is gone already. Like the money is gone.
Yeah.
Right? And you cannot really, and
you cannot ask it like, give me the 25K again.
But as a company, can you blame the seller?
No.
It's your mistake as a company.
Exactly. And sellers, of course,
that's crazy.
Some say, hey, you paid me too much, a couple of thousand, but usually it doesn't happen, right?
Yeah.
Because those sellers are unicorns.
Yeah.
Yeah, exactly. So I would say that basically your biggest competitor, it's basically spreadsheet and
it's
not
Microsoft.
a specific, exactly, right? It's Excel and not another company doing exactly what you're doing.
No.
Because this old status quo is killing productivity, is killing all the things that we are saying here.
Exactly.
That's
our
crazy.
biggest competitor is Microsoft Excel or spreadsheets, and companies trying to create some sort of internal system developed, made by themselves, which is super rigid, not flexible.
Like an Excel of testosterone.
Exactly, man. It's crazy.
Yeah.
So what would be understanding who you sell to, how you sell it, what you solve? Can you share some success stories and some crazy, maybe BS failure stories from clients? You don't have to name them if you want to name drop some for sure. But meaning that, hey, I've seen this crazy stuff. And when we implemented this, we saw this shift, like going from A to B. Do you have some?
Well, there's one example of companies paying millions because there were some mistakes on spreadsheets. I've seen companies having massive spreadsheets connected one to each other in one single computer somewhere.
It's risky.
That person going on a sick leave and the company being 2-3 months without being able to pay.
Yeah,
I've seen companies migrating CRM and then all the Excel models were destroyed because they were not working, and they've been with thousands of sellers paying for months. Okay, we're gonna pay some average because we don't know exactly what we need to pay you.
Wow.
I've seen all of this.
That's crazy.
And these are not, SMBs.
These are big companies.
Big companies. And that's more on the, again, management and calculation standpoint. On the pure comp plan definition, communication and motivation, I see
crazy stuff.
Crazy stuff.
Like the guy I told you before, at one point he was like, he got two less commission payout the month before, and he realized, he said, I'm not gonna work today. I'm waiting until my commission is paid. And he was like this. He said, I'm not gonna work.
Money drives behavior.
Yeah, until my commission is on my bank account, I'm not gonna work. I'm gonna sit here and not gonna do anything.
And you can multiply that times.
Okay, he was like extreme, but it's inside of every salesperson, right? Of course, we are all sneaky guys on one point to, trick the system somehow. But on one point, of course, if you close the deals, you want to get paid. And you want to get paid a fair amount and the amount you earned, right?
Normally, one thing I also say is that top performer sellers are professional compensation plan hackers.
Yeah, like a really good one.
They get a compensation, they try to understand how it works, and now they try to maximize how they can make money.
The thing is that...
And that's why if you build the comp plan
I love this.
properly, you are driving behavior from your top performers.
I actually found maybe I hope my manager is not listening, but I found
We can block him.
no.
Cut it now.
We can block him.
I found a gap, and I explained her. I said, "Hey, look, but I think if we do a non-ARR deal with the company as a POC, and then after a couple of months we close, we have because the non-ARR commission is the same like the ARR commission, so it doesn't really matter, but it's double business for us, right?" And she said, "Oh, that's interesting, and I get paid the same. It's fantastic."
I've seen account managers earning, like I've seen account managers making their company lose money and earning commissions because of a pure design compensation.
Wow,
I was one of those. And I changed that behavior.
Tell us the story, please.
I will tell the story, but let me. I mean, these are all confessions, I guess, and let's take the time to share the confessions, because basically what happened in this company that I was working with, I was the AE, and I think that, and this is something that I train and I coach when I train sales teams. That is like, hey guys, if you want to become a top performer, the first thing that you need to do, besides being the best, and we can deep dive there, it's understanding your numbers, know your numbers, meaning not only the compensation plan, but KPIs, how they are driven, how they are basically impacted, and so on and so forth. But in this company, basically what happened is that we were paid based on contracts signed. And this is crazy. Why? Because the behavior driven there was, hey, 31st of January at 11 p.m. at night, I was sending emails to Mexico that was 6 p.m. Sign this contract with a 50% discount because I don't care. I will get paid because of that.
Wow.
And I will hit quota. Then that contract, who never knows? I mean, never got into the processing process. The payment never went through, but I got my commission. So I was making a lot of money that the company is not even receiving in their bank account, multiplied by X times sellers. So when I was promoted to sales manager, the first thing that I did.
But you didn't say anything while you were
I said it. No, I said it. I promise. But yeah, that was a long time ago.
You made a confession that you were hacking the system, sending contacts to Mexico.
When I started watching this, I would like you can see the power of how powerful this is in terms of behavior driving, because it's like, hey, I'm against this ethical, but if the gap is there, I mean, should I expect to send the email tomorrow instead of today if I will get paid today?
Man,
it doesn't make sense. So what happened is that after I became a sales manager, my whole team, that was my former colleagues, AEs, said, hey guys, you will hate me, but this needs to stop. We are stealing money from the company. I mean, we are going to lose our jobs. So I changed that, and I say, and we were fighting with customer success a lot. It's like, hey, this is the contract, this is yours, hand over. That's the whole process.
Misaligned incentives.
Misaligned incentive 100%, and let's jump into that topic. But basically, to conclude the story, I said, hey, first of all, we are going to pay commissions just on signed contracts and only when the money jumped into the bank or got into the bank. So the money needs to be in the bank. And the commission will be calculated. It was a simple, maybe wrong, but simple at the time. And it will be paid 90 days from now, so quarterly. So we will have to wait until that starts compounding and we have the rollout. But it will get only paid if during those 90 days, we don't have a churn from that client.
Mm-hmm.
So for sure, they hate me. They said everything that I could listen about my family and more.
Probably the CFO loved you.
The CFO, the founder, that you know, the guy, and my boss at that time, that was the VP of customer success and COO as well, was like, hey, this is really smart. And it's like, no, it's not really smart. I'm stealing your money. I think that I'm not smart enough, but this is okay. So what happened is that we became best friends with customer success. We were joining onboarding calls. We were joining the 3 weeks after onboarding call. We were running calls with the client after signing them. Like, hey, anything that you need, anything that I can help you with. And that was like a huge change in behavior. And the manager was saying
like it's written there, money drives behavior.
Exactly, man.
It's a perfect
what
example.
We noticed 90 days later, or maybe 6 months later, after we got a little bit of snowball, let's say, effect, that sellers were performing better. We had a healthy behavior within the company and the teams, and the money were flowing no matter what. But we were closing as good sellers, not just sending contracts out there with 50% discount just to get the money, right?
Yeah.
So with that in mind, and that crazy story, you mentioned misalignment. What are the biggest or the most crazy cases where you see, hey, this is so easy to identify. Why are you doing it this way? Where there is a misalignment within the compensation and the rest of the company.
Normally it's about goals. So what are the goals of the company and what are the goals, not that the goals that you set to your team, the goals that you are putting behind the compensation plan. Meaning,
okay, for example,
where you put them. In your example, they were probably not trying to incentivize you on signing contracts alone. They were incentivizing you on bringing revenue to the company. But what was the goal in your compensation plan? It was not revenue. It was signed contracts. So what were you delivering? Signed contracts.
Mm-hmm.
This is probably the biggest mistake that can take different shapes, forms, and different examples. But that's one of the biggest ones that I've seen. Also between teams, you were talking about handover. The way you established clawbacks, which is how we as a company make sure that if you brought something that is not whatever converting, churning, how do we retroactively impact you, or the fact that you included a gap of 90 days to make sure that the money was flowing in. So all of these kind of things needs to be adapted. And that needs to be created together with the goals of the company. Because if at certain point, the goal of the company is grow at any cost and there's no cash flow issue, maybe as a company, you don't need to wait to get the cash in to actually pay the customers.
Exactly.
The sellers.
Exactly.
I would still advise to make sure that the contract is valid. Like contract signed, maybe it's not enough.
Exactly.
But obviously,
it's a legit one. Yeah.
Yeah. And every company is a little bit different what that might mean.
Correct.
But sellers want to see money and they want to see it as fast as possible.
Exactly. Right now.
So waiting for the collection might not be the way that you motivate the most your team.
Yeah.
So if you're in a growth mode, maybe, and Signature, we had a time that we were doing this.
Pay it as fast as possible.
Pay as fast as possible if you don't have cash flow problems.
Correct.
But at some point, that company will mature and then cash flow will become more and more important. And in that moment, if you don't change the compensation plan,
you will get bankrupt. You will be bankrupt, basically, because of financial problems.
So these are some simple examples of things that misalign incentive or goals for the company and goals for these individuals. And I always say, put the money where your mouth is. If you want them to bring revenue, incentivize revenue. If you want them to bring quality revenue, whatever that means, incentivize quality revenue.
That's crazy. And what would you... Sorry, man. What would you recommend? I guess that the answer would be, it depends, right? But if you have to bet on something or based on your experience, it is better to pay commissions quarterly, monthly, every semester. It depends on a lot of factors, I guess. But what do you see? What drives more behavior? Or
out of your experience now, because you're helping even companies to design those.
I can give you, and the audience, please do not take this 100% for granted, but I can give you some guidance. I think the frequency in which you pay out and measure teams, the easiest way is to try to match it as much as possible with the sales cycle that you have.
Okay.
Considering always in mind that the more frequent you pay your sellers, the better for motivation.
Okay.
So that also you need to take into account, and also considering the cash flow. But a quick example, if you have a super transactional business where your sales cycle is, let's say, 20 days, paying your team on a quarterly basis,
it doesn't make sense.
It doesn't make sense at all. If you have a super enterprise business where you probably have 6 to 9 months sales cycle, paying monthly, it probably doesn't make sense unless you set up yearly cumulative targets that you advance partially on a monthly basis, but you actually true up at the end of the year with a yearly quota. So in the first example, you might set monthly targets, and it makes sense. And probably they're not going to sandbag a lot of deals, which sandbagging is a huge side effect of sales compensation. If you have an enterprise business model, you might go for yearly quarters and then pay on a quarterly basis, in a cumulative basis.
Correct.
And apply some accelerators there once the year-to-date quota has been achieved. Because also there's a lot of misuse of accelerators as well when you combine sales cycle with frequencies and so on, because you might have side effects in the sandbagging, but also in actually paying more on a unitary basis on the sales, because you are designing the decelerators and accelerators.
That's crazy.
And that's common mistakes I see a lot in tech, in B2B SaaS. And again, example being someone that has been an individual contributor in a company who is more targeting SMB, so small, short sales cycles, that suddenly become manager on the enterprise side, and then they apply the same kind of incentives into enterprise, or
the other way around.
Or the other way around. So you always need to try to understand
it's
the
important.
context.
It's important.
And the same company in growth mode, or the same company once they are PE backed, where they're looking for EBITDA, you need to change it.
Basically, the compensation plans are dynamic at some point. Every yearly, every whatever the timeline.
Specifically about the spiff topic, right? Because I think like salespeople are hunters. Hunters need spiffs, in my opinion, and I realized it with the SDRs, right? SDRs maybe don't get the highest commission. In some companies they do, but they definitely, they are hungry when they see, okay, we get like, I don't know, 5K who schedule the most meetings. All that is also part Remuner can add into the.
Absolutely.
Okay.
But what I always tell, I see a lot of customers coming to me and saying, we want to gamify the experience. Yeah. And I always tell them, that's right, but that's not something that you can get only from what tool? From a tool, not Remuner. Gamifying the experience is also based on design of your comp plans. If you have a 20-day, I'm going to put a super extreme example. If you have a 20-day sales cycle and you set a yearly target, only paid on a yearly basis, but I want a super gamified dashboard for the sellers, that's not motivating for them.
Mm-hmm.
Yeah.
The spiffs, all the different challenges that you can do, and you can be super creative there. Those, and especially if they are not something that they might see coming. So if you try to innovate and change, that's what really drives the motivation and the gamification.
The behavior,
And then having a tool that helps them visualize and engage with that, that's a booster. But the design of the comp plan is the really the secret sauce of all of this. And I see a lot of companies not really changing that. Why? Because it's a pain in the ass. Because change management, communication.
They don't. Yeah, it's crazy. It's crazy sellers, difficult.
I'm sure that every time that your manager came to you and shared, this is your new comp plan, your first reaction is, shit, they're gonna steal money from me.
They're gonna scam me. They're gonna scam me.